Okay, so let's actually get talking to a couple of the guests who join in order to talk about the trade deficit data. As of now, we have Samran Chakrabarti, Head of Research of Stancy, joining in. Samran, hi, good to see you in this morning. What is your expectation on the trade deficit data? And do you think that it's even going to be that market moving or even moving on the yields?
Well, I think the markets have now kind of factored in a reasonably good number on the trade data. We are looking at somewhere in the range of 10 to 10.5 on the trade deficit. That kind of a number will not surprise the markets. If we get a print which is below 8 or so, then obviously we will be looking at some more positives. Because what market is also looking at today, especially from the bond market perspective, is that in the last quarter of the year, how much of liquidity addition will come from BOP being in the surplus mode, and to what extent it will counterbalance the drag from the fiscal side. So I think that's where bond markets will be looking at this data also very, very closely, not just the rupee market.
Okay, we have Leif Eskisson also of HSBC joining in. Leif, same question to you. What is your expectation on the trade deficit data due in a couple of minutes?
Well, we're looking at, potentially a little bit of an uptick in export growth, but a somewhat slower deceleration, if you will, or contraction in import growth. I think overall the trade...
Leif, actually the numbers have come in. The export data has come in 3.5% higher at 26.35. That is 2 billion better than what it was in the month of November. So it looks like we will be on target for a 9 billion rather than a 10.5 billion, but that's only the export data that we have got. We have to await the import and the trade deficit data. Just coming to you in a minute. The first number is very positive because on a month-on-month basis it is indicating almost, a $1.8 billion improved performance. So this looks good, but that's only the first data that we have got. April-December export at 230. That's not helping us understand anything much better. We have to await the import data. And
the market reacted exports positively, Lata, at least the stock market. There's a big uptick that you've seen once you read out the export number of $26.35 billion.
And that was actually, Lata, one of the key points in the previous month where we did see a little bit of trepidation because the exports only grew around 5.6%. So there is a little higher export data on a month-on-month basis, which I think even the street was watching out for quite keenly.
In the month of September, we also had an advantage of a lower base. Now perhaps that also wears down a bit. Actually, year on year, okay, the import number has come in at 36. So that means we have a trade deficit of 10 billion or 10.1 billion. So that's actually par for the course. So just to revise the import data for the benefit of Samiran and Leif, imports are at 36.49 and exports are at 26.35, giving you a trade deficit of 10.14 to be precise.
$10.14 billion.
Yeah, so that is, very much like what we have done. We have done 9.2 billion last month. And previous months, some of the June-July months when we were still recovering, we had done 12 billion. At 10 billion, I think we are very much on course to come to perhaps Samiran's current account deficit expectation of, I think, 45 billion for the full year or 2.5%. First thoughts, Samiran, from these deficit and trade numbers?
Well, as I was saying, that this is more or less in line with the expectations of ours as well as the market. So clearly the uptick in exports is a positive. We were factoring in that kind of an improvement because we realized that the November number was a little bit peculiar because of one or two particular items. In December, it seems those items are off the table, so that number has improved. Even imports, the kind of decline at around 36 billion compared to 43 billion in the same month last year would indicate that gold imports have not picked up even for December. So that overall is showing the improvement in the current account. And I might just stick out my neck and say that I would not be surprised if the full year current account deficit is even lower than my current estimate of about $45 billion.
Okay, Samiran, you would already be able to calculate perhaps the trade deficit for the full quarter now that we have the December numbers. If you remember them off the cuff, I remember the November number 9.2. So what is the trade deficit for the full quarter?
Full quarter would be about $28 billion.
And I think we get normally 26 billion by way of remittances and software exports. So should we say that this quarter as well, our current account deficit will be lower than 5 billion? Is that a safe bet?
Yes, it could well be lower than the number that you have seen for the September ending quarter.
Okay. Prasanna has also joined in from ICICI Securities Primary Dealership Unit. Prasanna, your first thoughts on the number. 10.14 billion is the trade deficit. Imports down 6.6%. No, sorry. Imports are down 15% to 36.5 billion and exports up 3.5% to 26.3 billion. Your first thoughts in line with expectation?
I mean, it's slightly higher. I think we were expecting it to be a bit south of 10 billion. What obviously we have to see, I mean, we have to see the breakup of exports, which we obviously don't get immediately. I think last month we saw a bit of a deceleration in exports in a few categories. So we were hoping that was just a one-off and probably there could be a pickup. On prima facie, it doesn't look like that pickup has happened yet.
So how are you looking at, first of all, the current account deficit for this quarter, I mean for the December quarter and in fact for the whole year?
No, for the full year, our estimate is around 45 billion, and I guess now there is some downside risk to it. There's no doubt to it, and I guess this quarter, perhaps seeing around 5 billion kind of a number we should expect. So I think overall, as far as current account deficit is concerned, I think, compared to where we started off earlier, I think it's just a question of, I think most of the market is just revising the estimates downwards. So I think the fear of current account deficit which we had, I think is clearly behind us.
Okay, Samiran, just wanted to extend that point with regards to exports, because in the previous month it was up 5.6%. It slowed down to a growth of around 3.5%. How would you read the growth in exports that we've seen, and is there any base effect which has come into play this time round as well?
Look, last month there were two factors which people talked about. One is decline in precious stones exports, and the other one was a decline in auto exports because of some non-tariff barriers being imposed in some of the African and Latin countries. So we'll have to see the break-off of this data to find out whether similar trend is getting continued in December or not. But if these kind of non-tariff barriers are not being imposed, then our sense is that in 2014, since we are expecting global growth to pick up, particularly in destinations where India exports more, there is a chance that the export growth numbers will turn out to be better for the full year as well.